What's the Cincinnati real estate market going to do in 2022? Let's talk about that right after this. Hi, I'm Rhonda with Comey & Shepherd Realtors, and today I want to dive into where we really think the market's going to go, because people say that it's going to crash or what's going on right now is not sustainable. And there's a reason that we are in the situation we are in right now. There's a lack of supply. So builders have not kept up with demand over the last 10 years or so. They were not building what they call spec homes. And many companies still are not building them because they don't want to get burned. They make sure that everybody is good to go and they're financed, and whether they've sold their house in advance or whatever, like they want to make sure they're not going to end up with that house, because they got burned really bad back in 2008, and or they just have stuff going on all over the country and they can't afford to have a lot of just unpaid for market homes sitting out there. Market homes, spec homes, same thing. So builders haven't kept up with supply. We also had an increase in birth rate in the 80s and 90s, which now those folks are they're in their 30s. They're wanting to settle down. They're having families and they are ready to buy homes if they haven't already. And so we've got older people who cannot move into condos because they can't find them. So they're staying in their homes longer. And, they're not quite ready to move on into assisted living. So, you know what I mean? So we've got all these things kind of happening that have created this kind of issue where people haven't wanted to move or couldn't move. And maybe they finally got to the place where they had been underwater, but they finally got to the place where they have the equity in their home that they can sell it, and they don't know where to go. And so it's just kind of all of these pieces that are making it really, really challenging on inventory. But does that mean we're going to crash? Does it mean, no, I don't see a crash coming. Now, we have seen like October, November, it was a little questionable. Like, what's happening? Like, things are overpriced. They're expiring. Maybe the market's really shifting. Well, not really. People just overprice things. That was the big problem. And then they were just doing price reductions to get those prices in line with where they really needed to be. Plus a little less demand, like demand just kind of fell off after school started, but it picked back up. November, December, people wanting to get into a new place for the holidays, demand has picked right back up. The other part of that is rental prices are through the roof. And every year people get that letter like, oh, it's time to renew your lease. And a lot of landlords are not letting people go month to month. They are forcing them to sign a new lease with like a 20% increase in rent. And people just look at it and they go, I've been doing this for how long? I am not gaining anything by doing this. Maybe it's time that I consider buying a home. So we've got all those people as well wanting to purchase. And we just don't have the inventory. We had heard interest rates were going to go up, and they're not, they're up and down, but they're under 3.5%. So my prediction is that here in Cincinnati, we've got Procter & Gamble, their stock increased 13% is the last thing I read. But, you know, multiple businesses that they're solid. They're not going anywhere. They're in the types of businesses that people need. And like Procter and Gamble, you need toilet paper, you need toothpaste and soap and deodorant and all of those things. And, you know, I mean, I actually heard a story last year. I was speaking to an agent that was in Pennsylvania, and her husband worked for Procter and Gamble. And she said that at one point the neighbors were chasing him down the street when he came home because they were hoping they would be able to somehow miraculously get toilet paper from him, because that was one of the lines that he dealt with. Procter & Gamble, solid. They're not going anywhere. We did see Luxottica in Mason decide to pull some of the people from that location, and they're pushing them into other parts of the world. And so we had some concerns about Mason, because Mason is a really strong market. But so far, we have not seen a glut of houses. We have not seen demand lessen in that area. Not one bit. Again, my prediction, unless interest rates rise over 4.5%, I believe that we are going to stay on the current trajectory where things will go up. They're going to continue to increase. And we're seeing, you know, predictions of housing will, you know, rise at an average rate of 3.5% to 5%. And then we're also seeing predictions of like 7-8%. And I think in this area, we're going to be looking at that 7-8 to maybe even 10% increase in prices during the course of 2022, as long as those interest rates do not jump up above 4.5%. Because I kind of feel like that's the tipping point. People feel like, oh, wait, that's way too much. I don't want to go that high. Because there are some people still paying 4% now, as in just with their credit and this and that. Like, they're up at that 3.85 or 4% to get a mortgage. And it hasn't stopped them from wanting to buy a home. So, do you see my point? Like, it's not really going to change. Something big has to happen. I predict 7 to 10% increase in price, and market demand is going to stay high during 2022 unless something gigantic changes in the world. But with Omicron coming in and kind of freaking everybody out again, it reduces the number of showings. It just creates that pent up, you know, excitement and again, almost, oh my gosh, I have to buy a house now mentality. So we'll see what happens, but hopefully everyone out there is staying happy and healthy. And you know what, guys? We will see you in 2022. If this has been helpful, remember to like, share, and subscribe. And we'll see you next time.